And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, futures family. Happy Friday. It's time for the market prep, Friday, February the 10th. My name's John. Thanks for trusting me with your time. If you're already in the markets, hopefully things are going your way, but our focus here is always on context, good risk management, and staying patient in our trading today. Hey, it's Super Bowl weekend, Super Bowl Sunday. I don't really have any stake in the game. I understand it's looking like it's going to be a pretty good game. No blowouts this time. Just so you know, I will be here on Monday morning for the market prep, but I've got some things to do the rest of the day when we will not be having Make Hogue Money, nor will we be having group coaching on Monday. But again, we'll be here for the prep. No reflection at the end of the day either. So what are we looking at today? Well, we've got 9 o'clock, the University of Michigan Consumer Sentiment, and the rig count at the end of the day. Probably a lot of eyeballs on that, but it'll be too late to react to anything. As far as what we've got going on today, we've got stocks opening lower after yesterday's recession fear-driven break, and also the yield curve on the 2 and the 10-year inverted to its deepest since the early 80s, an 85 basis point yield curve inversion between the 2 and the 10-year yield. That is fear of recession. That's what that is. So lots of questions. We've been looking for new information in this market. I think we may have gotten some of that new information tomorrow and perhaps into today. Crude prices have surged overnight as the Russians have announced they're going to cut their production by 500,000 barrels per day in a response to the international sanctions that are going on about the war in Ukraine. And as always, I ask that you pray for peace. So we've got some interesting things in these markets today. I'm still reeling from missing that trade in gold yesterday. We're going to take a look at that, how that played out today when we take a look at the charts. Probably one of the best trades I've seen this year, and I missed it, well, at least the beginning of it, so we'll again take a look at that. The VIX this morning is up 4%. It's up above 20 at 21.55. The fear factor coming back into the market on that break yesterday. The dollar index is higher this morning, 103.44, and the yield on the 10-year up at 3.7% now. As always, I ask that you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. It's good to see everybody this morning. I love my futures family. Shaw's the first one in the room winning the prize this morning, surviving another week. Spencer's been waiting for a gap open. We may get that for you today, Spencer. Caprice, good morning. Scott saw, and he conquered. Shane, good morning. Jeremy, good morning. Rooster, good morning. Fred talking about his market has been having trouble holding rallies, and it really had trouble holding rallies yesterday. It started really with, I think, some overnight inventory adjustment, and it just snowballed as the day went on. Octaraps, good morning. Don Clemens, Nastic, good morning. Vince, Dan Trader, good morning, Dan. Again, still hoping that everything is going well with your brother. Jason, good morning. Caesar, Stephen, Terry King, Kevin Laffey, good morning. Anthony Bell, good morning, everybody. JM, good morning. Caesar, Trading Research. Cohen, good morning. Cohen, maybe that's how that's pronounced, but it's glad that you're here. I don't know that you've popped in before, but again, welcome. We're glad you're here. Rooster's here. Open interest increased yesterday. Possible change in direction. It might be just what that means. Rooster. Bear goes long. Good morning. Lacey. Bear goes long says good morning. She's laying in the sun in the kitchen right now. We did survive the deluge of rain yesterday. I was afraid the house was going to sink into the muck, but we survived. It's a nice sunny day, 32 degrees. Can't complain about that for February, right? Go Eagles, Dan. We got an Eagles fan here. Pablo, good morning. Welcome. If this is your first, trip to the market prep, JT, good morning. Will, sliced you up overnight. These guys were really short. Yes, they are, and the short time frame, I believe, is really short. We're going to see if we can bring in some new business to the downside today. Orion, good morning. Dan Trader, Eagles. Got some Eagles fans here, it looks like. Andy, good morning. Jason, Don, Pablo, Rusty Golfer, my spirit animal is here. Sujit, good morning. Stephen, Sean, Shai, Dave, Alfred, Turbine. There's another possible new name I haven't seen. Thanks for popping in and saying hello. Serenity Trader, good morning. Stephen, saying good morning to Lacey. Denise, good morning. Pablo, Dan Trader, he's doing well. Yes, nothing is more important than our health, and it's something I've been trying to work on myself. It's kind of difficult, but we got to do what we have to do, right? Got a few more people in here. Just want to remind everybody, I said at the beginning of the prep today, I'm going to be doing the prep on Monday, but that's it. No coaching, no make whole money, no reflection. I'm going to do the prep in the morning, and I've got some things to do on Monday. So just the prep Monday, and then back to business as usual on Tuesday. And thank you, Dan. Very nice. All right, so we're going to jump into the charts here. I'm, like I said, still reeling from missing that gold trade during the prep yesterday, but I've missed better trades, but that was one of the best trades, I think, that we've seen this year. And Fred, when you see this in gold, if you haven't already, this was a really cheap trade. It wasn't necessarily pointed out in profile, but it was pointed out on the 30-minute chart. We were in a bear flag. We got to the top of the channel of the bear flag, almost to the tick, and the market just crumbled from that point forward. Yes, Stephen, I do have somewhat of a life outside of trading. I do enjoy what I do. Trading is life. We got to make sure we do take time away. I'm going to be stepping away in June for a few days. Going to go down to Florida. Going to probably head down to Table Rock Lake at some point this summer and go hang out there for a little while. And got a wedding anniversary in March. We're going to take a day off for that. So I'm going to be, stepping away from time to time. And you have to do it. You got to look away once in a while. I think we get so close to what we're doing, and it's so important to us that we get so close to the trees we can't see the forest. So we got to take a little bit of time away. Stephen, it is my pleasure. I'm blessed to have the opportunity to spend time with you as well. All right, let's jump into the charts here. We're going to start, as we usually do on the prep here, with the daily in the S&Ps. So we did fall into a degree of balance up here. We've been pulling back. The market has been struggling to hold rallies. Certainly struggled yesterday, and we added 23,000 in open interest. Is this sticky, longer time frame shorts, or is this weaker hands, speculators, swing traders By looking at the delta yesterday, I'd say that there's a probability that it's more shorter time frame traders, speculators, that really barreled into this short yesterday. We'll take a look at that on the charts here. The medium time frame structure that we've got here is sort of at risk of breaking. It's more at risk of breaking in the NASDAQ, which we'll see shortly. But I think we've still got a little bit of downside left before I'm really going to start to worry that this upside move is breaking structurally. This trend line has a lot to do with that. Been saying all week the market has been struggling to hold rallies. The 30-minute chart shows a bull flag. We were relatively close to the upper extreme of that bull flag yesterday. The opening range ended up being the high of the entire session. If you were in make-hog money, we took that short. We made some money on it. Was I expecting a move of this magnitude? I don't think I really was, but it was entirely possible. We get to one extreme of a bear or bull flag. We're going to fade that extreme, and then the target for it is the other extreme. Well, we went pretty much from high to low yesterday. We didn't close below this trend line. We did close here at 40.91, so we really didn't leave a late spike, but we are holding some overnight inventory to the short side that may be reconciling here prior to the open. Looks like we're going to get that gap you've been looking for. Spencer was the one looking for that gap. You might get it today. Well, that's going to give us some reference, right? That may be telling us that the market is continuing to accept lower pricing. This trend line, 1, 2, 3 points of contact. We looked below it and rejected yesterday. We're coming at it from the other direction now. If this was considered support yesterday and last night to a point, it may end up being resistance this morning. A gap close, I think, is a pretty decent opportunity for us to look for an execution. If we open with a gap and accept back inside value from yesterday, that's a value area special situation play, may show rejection below the lower thing, the lower trend line of this bull flag, and could bring us all the way back up to the high of value from yesterday. Now, this is a double distribution trend day. It's toothy, it's emotional, and not exceedingly confident. Look at the delta that was accumulated yesterday on this move to the downside. I mean, we got down almost 30,000 in negative delta. What does delta tell us? It tells us that the more aggressive traders were using market orders to hit bids all the way down. That is a behavior more like your shorter time frame traders. The longer time frame, they're usually not going to be that aggressive. They're going to accumulate using tricks. If they're sellers, they want to sell the offer. They're not necessarily going to be sitting there pressing market orders to sell this market. So if we were going to be thinking that this is a longer time frame accumulation of open interest of approximately 23,000 yesterday, the behavior yesterday and this deep delta says something different. It says to me, shorter time frame, swing traders, speculators. If we're going to see the longer time frame, it's going to be today. And that's what our speculators are thinking. The shorts, shorter time frame swing traders, pea shooters like me, that whole community of traders is looking for the market to continue to push lower. If the other time frame, longer time frame traders do not come in and do that for us, then I think there's a good possibility of reacceptance inside the bull flag and a move to the upside. Gap rules. If we open and we can't close this gap relatively early, then it's looking for opportunities for continuation to the downside. If we close this gap and show signs of acceptance inside value, then I think the other direction is likely. And a lot of it may hinge off this trend line. What was support becomes resistance. Take a look at the TPO chart yesterday. Another reason I'm thinking that this was not a very confident downside move. So we have a double distribution trend day. We have a distribution of time and volume here, single TPOs, single prints here, and we start to show an area of possible balance down here. Why don't I think this is exceedingly confident to the downside is because we left a 2 TPO anomaly here. We left anomaly here. I have Randolph trying to call me right now. I don't see that he's necessarily in the room. He might be trying to tell me something. You guys can hear and see everything, right? Well, I'll call him back. TPO is up. Okay. All right. Yeah. Okay. All right. Well, I guess we're good then. TPO is not an indicator chart language. It's just a context tool. It's another way to organize the information from the marketplace. Thank you guys. You guys here can hear and see everything. Okay, good. Okay, so if we cannot, YouTube is working. Okay, good. If we again can't come back into value, if we gap and can't close the gap, we're looking to the downside. If we come in and show acceptance inside value, that could change things. Now remember, TPO value is all the way down here. Volume value, however, is all the way up here. He's calling you to talk about the trade of a lifetime happening now. I'm sure he is. Chart language. Good. I'm glad that you're enjoying and getting a lot out of group trading and group coaching and make hope money and all that. Been killing it. That's great. So, all right. The open interest with the deep negative delta kind of hints of shorter time frame sellers. If those shorter time frame sellers don't get what they're looking for today, they may be too short to break this market. Take a look at crude oil now. All right. So with news from Russia cutting production, I thought nobody was supposed to be buying their crude oil to begin with, but that's just me. Open interest loss on this pullback yesterday, I believe, is healthy for continuation to the upside. We are wrestling right now with weekly kickoff high. We've come off the highs pretty seriously here. We are coming into rollover in crude oil. Next Thursday, a week from yesterday, is switch day, so we're going to keep that in mind as our longer time frame traders work on getting a cheap roll, maybe a little less directional if they can help it. We do accept above weekly kickoff high. This is going to be a sticky area. I think this is going to be a tough nut to get through. Okay. We lost again 2,500 in open interest yesterday. So here's the 30-minute chart. What did we do yesterday? We opened, we came and traded to and rechecked this naked point of control from 2-3 days ago. The news last night when Russia said that, look at the volume. That's almost day time frame volume at 2 o'clock last night is when that news came out. And boy, the traders really jumped into this. We've got overnight inventory that was to the long side that has largely reconciled, and we've opened back below weekly kickoff high here, 79.30s weekly kickoff high. This is likely going to be resistance for us today. It's almost a long above, short below technique or thought. Be careful doing that, because if we do kind of become magnetic towards weekly kickoff level, it can chew you up. We've opened with a gap. We've been unable to close the gap. Gap rules apply. We've got, overall higher highs and higher lows. So, interesting spot up here. I think there's probably some fish around late weekly kickoff high here. And again, if we can't close the gap, I'll be looking for opportunities to buy weakness to see if this market can continue this push to the upside. Here's yesterday's TPO chart. Normal variation day. The initial balance is neither the high nor the low. This is the only market today that did not have one of the extremes of the initial balance as a high or low for the regular trading hour session. Normal variation day, a little bit extreme, point of control in the upper half of the profile. An attempted continuation into the close yesterday. Did not necessarily put in a late spike, but it doesn't matter. We've got gap rules now. This is telling us that there's a potential acceptance of higher pricing. If we can't close the gap, we're looking for opportunities to trade in the direction of the gap, which would have us looking for longs. Look at the NASDAQ now. So we were talking in the S&Ps about there's a potential medium time frame market state break upon acceptance below this trend line. The NASDAQ has traded basically right to it in the overnight session. The NASDAQ also has not really shown much activity outside of the bull flag that we're still working with. The NASDAQ, the open interest yesterday, absolutely moot. The estimated is around minus 300 contracts. Nothing changed hands yesterday. Are you kidding me? I find that a little bit confusing. We do have a potential market state break at this trend line. That's going to be pivotal for us today. Take a look at the 30. So this trend line doesn't necessarily have really good points of contact. I've tried it every which way. I kind of had it kind of up here, just with this point of contact, and this point of contact, and this point of contact. I'm not quite sure where to put it. So I've just kind of left it down here based off of, in essence, daytime frame lows. We're going to be opening with a gap. Again, is this a confident profile to the downside? What do I have here? So it looks more like the bull flag is still more intact in the NASDAQ than it is in the S&Ps. There's the high, initial balance high, opening range, the high of the session, sellers all day long. Take a look at the profile. This is, I think, a little bit more confident than the S&P profile to the downside. A little bit of an anomaly here, just some toothiness here, but this is a real trend day. It's not even necessarily a double distribution trend day. This is pressure all day long, and it's one of the things that really freaks me out about the fact that they're saying there was no open interest change yesterday. I just find that very difficult to believe. We'll have to watch and see when the final comes out and see if it agrees with the preliminary. It just kind of freaks me out. Here's the overnight double distribution. We're in the lower distribution. Single ticks here. Basically the overnight or the low from the session from yesterday. Not a late spike. We closed up here at 12,425 and a half. Basically, gap rules today. Here's the gold. Oh my goodness, what a trade yesterday. We broke upside structure. We have continuation. We have a bear flag that broke the low yesterday. We lost 2,900 in open interest yesterday. Some of the shorter time frame longs getting into longs during this bear flag took it out and got whacked yesterday. So the longs certainly took it on the chin yesterday. Yesterday morning on the forecast, this is where price was. We had just tested to this trend line. We had looked a little bit above it, shown some rejection. I was crying because I was missing this opportunity during the prep. Did I think it was going to be worth as much as it was? No, I would really have been looking for a rotation to the low of this channel. But once it broke out down below, that was another opportunity to take the breakout of the bear flag and see this market continue to the downside. So we went from, let's call it 1902 to 1874. That's almost $3,000 a contract. One of the best trades I've seen all year so far, and I missed it. Fred, you want a cheap trade? Right there. And again, it's not necessarily provided by the profiles. I mean, look at where the market went. It went straight to it after the open, stopped, turned around, and dropped. But look at the points of contact. 1, 2, 3, 4, 5, 6, 7 points of contact. That's a very strong trend line. And pow. Oh. All right. Wait. TPO chart. Double distribution. Single TPOs here. We've opened in range and in value. We've looked below yesterday's range. We've so far have rejected. It seems as though we are staying true to value from yesterday. So if this remains the low, we could see this market kind of rotate and repair some of the profile from yesterday. Now, the high on this isn't all that strong. It's kind of a low excess high, but we have the excess from Tuesday. That's a lot of excess. The euro. Still wrestling, magnetic towards weekly kickoff. Maybe we're going to get some movement here today. Yesterday we added 800 in open interest. No big deal. Still, somewhat indecisive. Dollar has firmed a little bit. That's why we've got the euro kind of holding below weekly kickoff low here. Take a look at the 30-minute chart. Couldn't close this gap. What doesn't happen is as important as what does. We tried to close it. We were unable to. We have a bit of a bear flag here. We've broken out below the bottom of that bear flag, and we're now showing some potential move away from the weekly kickoff low here. Gap rules. Got quite a gap here. Overnight inventory is short. If you're looking for shorts, you may look for an inventory adjustment towards the gap, maybe towards weekly kickoff low here to look for an opportunity for an execution. Here's the TPO chart from yesterday. Double distribution trend day. Not a very strong high on this. But we've got excess here. This is also excess above price. Gap. There was one other thing. Well, maybe I'll go back to it on the S&Ps when we're done here. Okay, the 10-year. Open interest largely moot yesterday, losing 16,000. Maybe some longs capitulated near the close here. Balanced 3-day. We have potential breakout and continuation below this 3-day balance. Take a look at the 30-minute chart here. 1, 2, 3, 4-day regular trading hour balance. We've broken out kind of below that. We've closed the gap. We've got value, much higher. Overnight inventory, I would say, is already reconciled and adjusted. So this gap close here offers opportunity, I think. Take a look at the TPO chart from yesterday. Normal variation day, balance into imbalance. We are still out of balance here. So this gap close offers opportunity. Excess above price. And natural gas. All right, well, we've fallen into balance. Yesterday, we only added 200 in open interest. A rest day yesterday. Volume was okay. Here's the 30-minute chart. Inside regular trading hour range, largely inside value, no overnight inventory. This market is idling. You can hear it. It's just idling. Just a low purr. Take a look at the TPO chart here. Normal variation day. Not too extreme, but points of control below the center of the range. Put in a high right into the last 30 minutes, and then it came back. Well, look at where this market traded to. We've been talking about non-confident directional moves that leave anomalies like this. This market just reached up and tagged that anomaly before the close, and then it finished lower, finished down here. So what we did yesterday was we repaired this profile, double distribution. We filled in anything that needed to get done here. We checked the anomalies, and then we closed lower. Not a very strong low on this profile yesterday. Price maybe just got a little bit too cheap. Too short, I should say. Traders got a little bit too short. So we repaired this yesterday. We're right in the middle of it still. I'm going to stay patient if I'm trading the natural gas today, and thank goodness that I don't. It is a beastly market. But some of you like that, right? All right. So again, Monday, market prep, and that's it. No group coaching, no make Hogue money on Monday. I'm going to do the prep, and then I've got some things to do just to let you know again. And I will look forward to seeing you on Monday. It's the Super Bowl, so have some fun, have some chicken wings, have a couple of beers or a cup of coffee, whatever it is that you want to enjoy. I know there's going to be a lot of parties. I've got a couple of pools that I'm in. I'm not really a gambler as far as sports are concerned. I gamble for a living, so I just got a couple of pools. I'm going to some friend's house, going to have some beer and some munchies and watch the game together, and then come home, get a good night's sleep so we can meet for the prep on Monday. But again, that's going to be it. Back to business as usual on Tuesday. We do not have Make Hogue Money on today. We so far have not been doing them on Fridays. Give everybody a break. But we are thinking about making some changes in the coming weeks and months. So we will let you know as soon as those are solidified and in preparation. So say a prayer for peace. Take your deep breath. Have a great trading day. Stay patient and centered. And capital preservation. Preserve capital Fridays. Get out there and profit. Don't forget. Be kind to yourself and to others. Words to live by. Say a prayer for peace again, and I will see you on Monday morning for the prep. Stay out of trouble today. Have a great trading day and a wonderful weekend. Enjoy the game. Get some rest. Have a few chicken wings for me, and we'll see you on Monday. Have a good one.